All right, everyone, welcome back to the channel. Thank you for tuning in to another video. Let's talk about the most reliable trading strategy that I use in my own personal trading and how it is highly profitable. You can be successful if you just follow the step-by-steps of what I'm talking about. Look for these type setups to occur on your charts. Now, I like to use multiple chart confluence. I like to mark off my levels on a higher time frame. And the reason why is because if you mark off your levels on a slightly higher or a higher time frame or higher base chart, I don't use time frame charts. When I say higher time frame chart, I really mean a higher base chart because we're talking about range based charts, okay? Because that's what I trade. All right, so what I mean is that I mark off my zones on a higher base chart, okay? When you do that and the market taps into it, it really provides you more area and space to be able to trade from, okay? Can you trade specifically off of one chart and following the direction of the higher base or higher time frame charts? Yes, you can, okay? And I do it, time and time again throughout the sessions when I'm trading, if the market is, especially ranging. But when we have nice swings in the market to where it's breaking structure to the upside or downside, and I see, nice breaks of structure and price pulling back to a key area supply or demand, I'll mark that area off a higher time frame or higher base chart and wait patiently for the market to return back to the zone. And then it's a scale down approach. I talk about that strategy that I use in many videos here on the channel. But I just want to show you the most reliable strategy that works for me and how you can get in really good successful trades, ones that make sense, okay, and ones that will provide a higher means of profit, because if you know what you're doing and looking at the higher base charts when you get into these trades, then you can aim for certain key areas targeted on the higher time frame chart is what I'm trying to say, okay? So if we tap into, say for instance, a supply zone, what I'm going to show you here, and then I'm going to show you another example over on the NASDAQ. This is the ES futures. This is a supply zone right here. What we can see is the market made a high right here, and then it started making lower lows and lower highs to the downside, breaking through areas of structure. When I'm looking for a trade opportunity, the number one thing that I must see in every setup is a break of structure, okay, coming out or creating a zone. In this case here, we see the market push down, pull back, break structure to the downside, and we have a zone that's created right here. Now, you should know by now what this is. This is a supply zone, all right? So, as the market was retracing back to this area here, which we had an area of supply coming from, we had these areas of imbalances. I talked about that yesterday in the video, that the market is going to have to fill. And being that we retrace right back to the zone without any kind of zigzagging, meaning making higher highs and higher lows back to the upside, the market can come immediately right back down and test this low to fill in these gaps or these imbalances. All right, when I speak of gaps, I mean imbalances. I mean, you can see my charts are kind of sticking or freezing up a little bit. But anyways, we have an imbalance from here to here. We have an imbalance from here back up here. So when the market rejects this area, it's going to naturally come down and test this area here and then come down and test this area here. All right. So I took this actual trade. This was on the ES. This is from a few days back, and I showed an example of this setup before. But this was a nice high probability trade setup coming off of a supply area back up in here. Okay, and then all you do is when the market gets back to that higher time frame zone, or higher base chart zone, you just move down to your lower time frame chart. Okay, like I can move down to my 12 range, which I'll show you here. Let's move down, and what we can do is we can also let's go to the 24 range chart. I'm gonna show you, because you can mark up also a zone here, because it was a 24R range supply zone setting right there as well. So it's using multi-chart confluence. Marking a higher base chart zone, move it down to a lower base chart zone, and then you can actually move step down lower to your entry chart, which I use a 12 range chart, okay? And then you see there's another zone here. The smaller one is the 12 range supply zone that I've marked up. And all you do then is just wait for rejection, okay? That's one way of actually trading this strategy. And we want to trade it in the direction back down to fill in imbalances to the downside off the higher time frame chart. That's all we're doing. Okay, so when the market gets back to the 12R supply zone, the red one is the 60 range higher base, or our highest base time frame chart, and the blue one is the 24R the next chart down, okay, slightly higher than the 12 range, we mark that supply area off of that chart too. And then the green one is our 12R supply area. All 3 chart confluences, okay, multi-chart confluences. Once we get the rejection, when we get to the break of a candle in the opposite direction, I'll talk about that many times because people always ask about a rejection. All we're looking for is, I'll blow it up a little bit, is the break of a candle in the opposite direction, meaning the close and break of this bearish candle below the last bullish candle here, we're going short. Then all we need to do is look back over at our higher time frame to see what areas we can gauge, aim for. And those are going to be the areas of imbalances, those gaps that need to be filled. Okay, so we're waiting for rejection to take place on the lowest time frame chart once the market's tapped into. We've got all that confluence there from 3 charts. That makes it a really extreme high probability setup. All right, one of the most reliable setups that I love to trade in my own personal trading. So that's one example here. We're going to go over now to the to the NASDAQ chart. I'm going to show you an example as well. Now, what I want you to do is pay close attention to this. We had a run to the upside. The market turns around, starts breaking structure back to the downside. Okay, and you see this aggressive area selling right here. Then it pulls back, aggressive area selling, pulls back, aggressive area selling. So yeah, this was supply right here, but when we started to run back to the upside here and started taking out structure, look what happened, because we're going to focus in on this green area right here where this demand zone is resting in off of the 60 range chart. And we're going to mark that as an area of supply. Excuse me, demand. I'm sorry, guys, demand. But what we're going to be aiming for is to fill in the gaps to the left-hand side of the chart. That's why I say it's critical to always pay attention to what's also going on your left-hand side of your charts. Because, you know, when we're looking to get into a trade off a lower base chart, after we've marked up a higher base or higher time frame zone, we need to look to the left to see where are any means of gaps or voids that we need to, or imbalances that need to be filled in. Pay attention here. The market broke lower here. You see this? It broke lower here. On this candle here, it came back. It broke when this candle here came down and it broke below. It came back right here. So there's an imbalance resting right here. This candle here broke lower. When it came back right here, there's a small imbalance right here. So we have some areas of imbalances that need to be filled. But we're going to pay close attention to this imbalance area right here. This gap of void is at. I'm going to go ahead and draw it for you so you can see it. From right here, very small area, to right here. The area in between that is an area of imbalance. Now, as the market starts to break higher and break structure to the upside, this is another one of my most favorite, highly reliable trade strategy setups. Okay, when we're looking at the NASDAQ, or it can take place on the emini S&P 500. It doesn't really matter. Supply and demand is universal. So when you see these types of setups, and you can see the imbalances resting on the left-hand side of the chart, and we're breaking structure to the upside. You know, we broke this area right here. Once we broke through this area right here, it's going to aim for this if we can, you know, especially if we get a demand setup right here. So the market is breaking higher to the upside, okay, breaking structure, pulls back, breaks structure here. We got another high here. Pulls back and breaks structure back to the upside. But if you look at over to the left-hand side of your chart, it took out this area here as well. Now, once it does that, we got, you know, a bullish candle here. So this on a higher time frame, that's a nice, create a nice demand zone. Let's get rid of this ellipse right here. The market pulls back right to where? The demand zone right there. Then all we really need to do is move down to the lower time frame chart and look for confluence. Okay, if we got confluence there and we get a rejection, we can look to take the trade going long because we already broke through this area here. As it broke structure to the upside, it took out this area right here. And now we have an area of imbalance where it can definitely fill in. And if you pay close attention, when it broke this area of structure right here to the upside, took out the high right here, broke up to that upside, it came up. It not only did it take out this area here, but it also filled in the small area and imbalance right here. I'm going to show it to you right quick for all those that really can't see. But you can see where the market came up right here, right? It pulls back. When it broke structure right here, it took out this area here. It filled in this area of imbalance, resting right back up in between this gap right there. So that is now no longer valid, or no longer valid because we filled it. So we'll get rid of it. So now we just look for to see, is it going to pull back to this demand zone right here off the higher time frame chart, and then we move down to a lower time frame. Look for it, and it does. It comes back, pulls back to it. It's a high probability untested zone here off the higher base chart, the 60 range chart. When it taps into this area here, we just look for rejection on the lower time frame to take it where? Back up to fill in any areas of imbalances resting above. First area is we're going to want to see it do is take out here, maybe scale out and take out a few of your contracts or all, most of them and leave a runner to come back and maybe possibly fill in. Let's see, did we get any? Well, basically once it does that, you fill in any area of imbalance back up to this small area of resistance right here. So this is the lower time frame chart right here. Okay, as you can see, we have multi-chart confluence as well on the lower time frame. So two means of chart confluence. The more you have, the better you're off you are. It makes it more of a high probability setup. In this case here, when I'm looking at 24 range chart, I didn't really see the market didn't come in and tap into the an area of demand on the 24 range. So I looked down to the 12 range. I said, okay, here we go. We do have a small area of demand. If I said supply, guys, I'm sorry. I meant demand right here. It taps into it. It basically comes in the area. It breaks above, closing with the candle close in the opposite direction, go long, and we're going to aim for, again, the areas of imbalances on the higher time frame chart. So if we could get into this trade, say for example right here, maybe you were aggressive, got in here when it came down and wicked that area. I talk about when the market taps into a zone, wicks it, and then quickly moves away from it. This is two bullish hammer candles to the upside. Maybe you got in here at 748. And took it back up to the upside. Maybe you waited for the actual candle close above here at 52. Either way, you could have taken it back up to this area right here to fill in 65. So, you could pick yourself up there 10, 12 plus points really easy, okay? Because the market broke structure, took out this area here, and then all we have is that we have an area of imbalance resting above. And you mark the zone again off the higher base chart and move down to a lower base chart to find confluence. Then you get the rejection on the lower base chart. You take it back up to the area of imbalance. Simple as that. This, what I'm showing you here, is clearly, to me, it is the cornerstones of how I trade. It is the bread and butter. It's one of the best trade setups that I love to trade and the most reliable. When I see this type of setup here, when I'm looking to the left-hand side of my chart, seeing the market take out, as it's breaking structure to the upside, taking out areas to the left, and see what we have imbalances resting at. Again, it's super, super easy to do, really reliable strategy. Just practice it, back test it. We have traders that trade basically similar to this, the same way, just kind of, watching how I trade, taking notes, and then incorporate it into their own trading. If you can come over to the Discord and join us over there, and you'll see, which I highly recommend you do. So just find the link to the Discord down in the description portion of the video. Click on the link, invite yourself in. Maybe you want to become an elite member, which is $6.99 a month, and get the trade breakdowns like most traders. A lot of people have signed up for that because they want to understand and grasp the breakdowns that I talk about. When I take these trades, I break it down in depth so they can understand clearly what's taking place. Why did he take that trade? What was he thinking? What target areas was he targeting? Those type things. It's as if you kind of, I'm putting it out there, explaining it so you can understand from my mindset what I was thinking through the whole process. So if you want to become an elite channel member or elite channel supporter, find that link right below the Discord link in the description portion of the video, or you can click on the join button right here on the video. You see a button that says join. It'll bring up 2 tiers. Make sure you scroll down and click on the one that says elite channel supporter, and boom, there you go. $6.99 a month, not a day, not a week. It's just for a month. It's monthly. And you're supporting me as a content creator to pushing out this valuable information, which has been helping lots and lots of people. But again, if you don't believe me, you can ask, come over to the Discord, join. Discord is free, and you will find out for yourself. But that's all I have for you today in this video, guys. I appreciate everyone who continues supporting and watching the videos, and and leaving valuable comments. I mean, I really appreciate that. Positive comments on the channel and over on the Discord. So take the time. Go ahead, click on the subscribe button. If you really want to become part of the team and learn and educate yourself by means of watching the videos, not everyone, I understand, is going to probably grasp overnight, within a month, the strategy. Trust me, it takes time because you want to back test this stuff and forward test to make sure it works for you. But again, you're going to probably have to, if you got yourself tied up in a situation to where your mind is so wrapped around other strategies that maybe you paid, I don't know, some trading course somewhere and you pay good money for it and you can't get it out your mind, but it doesn't work for you. Trust me, I've been there. I know what it's like, and you're going to have to kind of hit the reset button to understand something new. So anyways, I appreciate you, everyone who's been following and watching the videos. Like I said, again, click on the subscribe button. Make sure to turn on all your post notifications by clicking that bell. And last but not least, drop a like on the video. I appreciate it, and I'll see everyone in the next video.